Hello, good afternoon. You're watching Closing Trades on ET Now with me, Vinny Motiwala. Along with me is Ajay Sharma as well. Ajay, this day is turning out to be, first I thought it was a bit dull, nice day. Suddenly in the last half an hour, I saw the markets fall. Again, they've recovered and back in the green as of now as well. The Nifty is trading with gains of 0.1%.
So actually, about 22,100 or thereabout, if you look at the last 6 months chart, you would see that about 22,100, there is a resistance between 22,100 to 22,200. This is a resistance zone. Thrice we have come here and scaled back. This is a resistance zone we are actually going towards. Till this is taken out nicely, we can't really say that we'll build upon this. So that's something to watch out for. Also, today's highlight is Bank Nifty. Nifty is, kind of a small gains, but Bank Nifty is where the big breakout is actually happening, and that is because HDFC Bank has come back. The commentary from HDFC Bank has gone down very well on the streets, gaining 2.5% almost, and is bringing the Bank Nifty higher. Also, pull up the small cap, mid cap, you will see that the participation from broader markets is relatively soft today. The small cap and the mid cap indices are actually in the green. So it's a very narrow kind of a gain, only led by large caps. That's the kind of market for you. Daljit Kohli is also joining us along with Kush on the charts. Nuresh also is here with us now. Gentlemen, all three of you, thank you so much for your time. Daljit, let me start with you. Last 2-3 days, some kind of a comparisons were being made. How US market now is almost 47% of world market cap. And within US, the Magnificent Seven are actually bulk of the gains out there, which means clearly that US market rally is a very narrow and a very concentrated rally. Today also that same kind of a market is panning out. Today's rally here in India is also large cap led, and within large cap also narrow. Do you think there is a risk we run for the market, at least for 2024, that broader market participation, which has already been so heavy in last 2-3 years, may actually go sideways and it's a large cap which will move, select large caps?
Good afternoon, Ajay. I think, this comparison is correct. And in fact, if you remember period before COVID, I think 2018 onwards, 18 to 20, Indian market was also exactly similar way, that just as what US market is currently. There they have this Magnificent Seven. We used to have those 5 stocks, HDFC Twins and Reliance, and so 4 or 5 stocks were just running at that time. And then it is only towards the starting of 2020, from January onwards, when we saw that the market started opening, and then March we had COVID. So I think as of now, for last almost 6-7 months, most people have been expecting that because small caps and mid caps have run so much, and the premium valuations are far ahead of their historical averages. So it makes logical that probably the large caps have to catch up. Now there are only 2 ways: either the large caps have to catch up, and the small cap and mid cap have to come down. Then only this market will converge. And we know that markets have a tendency of coming back to mean always. So that expectation was there, but just because we are expecting that large caps have not moved, therefore large cap will start moving, may not work out as in that fashion, mainly because as of now, the construct of our market is also changing. Now that this SIP money, this HNI, ultra HNI money, that is flowing. And those people don't normally go with the big names. In fact, if you see the people like us, AIFs and PMSs, we tend to avoid the first 100 companies, no? So most of our portfolios you will find, and like that, there are n number of PMS and AIFs which are working right now. They always go towards small, mid cap, and where the alpha generation capability and the probability is much higher. So just taking a broad call that perhaps large cap will perform because in US they are performing, and because in India they have not performed for last 1.5 years, they will start performing, may not be the right thing. It will depend upon stock specific, and it will depend upon the sector where you are. Yes, as of now, in the banking sector, I think private banks have been far too laggard for quite some time, and that probably their time will come now.
You know, private sector banks have been a laggard and seems like the time will come back. Good afternoon, gentlemen. This is Vinny this side as well. Kush, you know, let's just look at it in terms of the charts also. Firstly, for Nifty Bank and the Nifty, how are you seeing it? You know, currently today, Nifty, that 22,150 levels, what we're talking about as well. What is it that you're getting in terms of an indication there for both these charts?
Hi, Tanya. Very good afternoon to you, to Ajay, and to all the viewers. We are seeing quite a bit of an uptrend, building up on both the charts. I wasn't surprised to see the Nifty sort of stuck in a range just for today. Could happen for a day or two, and that's largely because of the weekly expiry. We've been knocking at the doors of 22,150 for a while now, but I think we'll probably just not only knock, perhaps break the door down. I have a positional target of 22,500 on the Nifty. Perhaps sometime next week, the Nifty will start making a move towards that. Bank Nifty, we've maintained a view that 46,800 was the hurdle to watch for. Today, it's been broken convincingly. I'd give it a day. I'd give it a day more just to see if we are able to sustain above this level. But if we are, then 48,000 and 48,500 are the next level to watch for on the Bank Nifty. We all know the kind of underperformance that was there on the Bank Nifty. There is a bit of catching up to do. And if you're able to sustain above 46,800 for one more day, I think 48,500 are is the next level to watch for. Just a quick word here that tomorrow is the Bank Nifty expiry, so perhaps this too could remain in a range. But other than that, I think the momentum is also upwards here.
Nuresh, what are your thoughts on HDFC Bank? Today I want to talk to you about more positional view. Say a 6-month bet if somebody takes from current levels rather than day-to-day view. What are your thoughts at 1450?
So the way to look at HDFC Bank is what has happened over the last 4 years. Now, if you go back to pre-COVID, HDFC Bank used to trade around 1250, 1300 levels. Then before the demerger, before the merger got announced, the stock had made a bottom around 1300 odd levels. After the demerger got announced, the stock went to 1700. Again, it made a low around 1250, 1300 levels. And now recently the stock made a low of 1350. So basically, if you were to go towards a period of 4 years, the returns come down to zero. So the whole de-rating exercise is over, various things which you could look out from. From here on, your bet is till the time it doesn't break the recent lows of 1350, you have a risk reward wherein the stock could recover back to 1480, then maybe even 1600. So overall, the view is the bottom is done. Whether it will be a outperformer, that's a question mark. Because when you look at a SBI, the stock makes a new 52-week high, all-time high. And that time also, HDFC Bank is at 1400, you're at 680 on SBI. So the relative choice is a problem, but from 1400, 1450 levels, the risk reward is in place. You have a downside which can be limited, but upside also is similarly not the best performer. So we could put it in a market performer case.
That's the view coming in from Nuresh. But, let's also listen in to what HDFC Shashidhar had to actually say. He's the MD and CEO at HDFC Bank. Like we spoke about, there were bites that came in from them as well, which actually kept the stock abuzz today as well. So listen in to what the management had to say.
We're not in the quantity game at all. We don't want to grow just for the sake of market share. Very clear, this is not a new philosophy. This is a philosophy that we have been building our franchise over the last 30 years. And we're proud of that, but we're not going to be compromising both on margins and risk. So there is a certain trajectory that we will operate, a band that we'll operate, whether it's a margin band, whether it's a ROA band, and that is something that we are very particular. If there is some kind of a disruption there, happy to go slow. So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth. And that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory.
That's HDFC Bank commentary, and that is sparking a rally. Daljit, I want to talk about not HDFC but some other stocks from the auto ancillary space. Sona BLW, after a very long phase of consolidation, the stock is gaining today 4%. I want to talk about the business model, not the stock. I know you cannot recommend stocks, but I want to talk about those auto ancillary which have a EV angle, plus which are not doing run-of-the-mill kind of products, more technological advanced products like Sona. What are your thoughts there?
Yes, that is the area. In fact, the only problem with this stock was that it was highly overpriced for when it came at the time of listing. People just gave it so much of valuation that over next 1.5 years, it has just gone into the consolidation phase. In terms of business model, I think it is the best story in to play for an EV cycle, EV conversion of engines from IC engine to EV. This will be probably the best. They have the maximum R&D there. They have the maximum projects there. Same way, we have chosen one or two auto ancillary companies in our portfolio, which are also in similar lines, like they are doing assembly work for engines for big names. If you see, after 5-6 years, luxury car market has blown up in India now. What we had expected in 2015, that has started happening now. So the numbers, our projections in 2015 for next 3 years, what we had penciled at that time, they have started coming now, because last 4-5 years everything went wrong for them. So companies like Mercedes, BMW, and all these kind of companies are doing roaring business. So guys who are ancillaries, who are positioned to take cater to these companies, they are definitely a big beneficiary. And I think this runway will be much longer, because now the economy is in much better shape. People's capability to buy these kind of cars is in a much better shape, and financing availability is there. So in auto ancillary, one has to be very choosy, basically. There are many options available. I'm not saying that anything related to ICE engine is going away. We are not penciling in our models that ICE engine in any case is getting extinct, or it is going to reduce to a substantial extent. I think at the most EV penetration in next 5 years, we are penciling is around probably 25 to 30%. So that means ICE engine will also stay. Point here is that companies who are capable of adapting to these changes, and companies who are more attuned to the change in lifestyle, the change in the buying behavior of auto vehicles, that will be more important. So ancillaries, if you have to choose, think on those lines.
Right, okay, that's the view coming in there. But, on that note, let's just slip into a very short break. We'll be back after the break. But seems like Nifty seems like giving up that gain that we were seeing, but flip-floppy day. But we'll be back after the break. Welcome back, and you're watching Closing Trades on ET now. 22,140 levels is where the Nifty continues to be at. In terms of individual movers, Z continues to be the top gainer on the FNO side. Locked on upper circuit, 10%, around that side as well. 10.5% is what the gains is. Power Grid, that's an interesting one. Deepak Nitrite is another name that has been buzzing away in trade as well. Daljit, I just want to talk to you about Deepak Nitrite as well, right? What a move that we've seen in the stocks as well. When you overall look at the chemical pack as a whole, I want to understand that how are you looking at this chemical sector? Yes, in the last few quarters, they have been a bit under trouble as well. Not good in terms of earnings that we've seen so far. Today, we actually managed to speak to Balaji Amines also as a management. They said that, now seems like the worst is over and they would see better things coming in. In this chemical sector, where would you look at? Anything that you're finding attractive, given that we've seen a fall coming in, valuation-wise, what is looking nice?
So as of now in the sector, what we are looking at is agrochemicals specifically, because we believe that it is going through the worst of its phase, and that phase will probably end in next 1 or 2 quarters. Now, we have been expecting this in the last quarter also, but it didn't happen. Maybe in the next, our wait will be one more quarter or so. So 1 or 2 quarters, we are expecting that agrochemicals should see some positive movements. Now, the entire sector is going through channel destocking, a lot of pumping and dumping by China. So all those has had an impact on these companies' performances. But what after this quarter numbers, current quarter which ended, most of the companies have given this commentary that probably things are near the end. They have not started turning around. So we have to wait for the turnaround to happen. Meanwhile, some of the valuations have come off well. Most of these stocks had gone very high valuation, so which was unjustified. Now most of them have taken that back. And so some of that froth is gone, but still I think some more valuation catch up has to be done. Means valuations have to become attractive. In case of agrochemicals, they are at the at the bottom of valuation also. So that is why we are looking at that sector. Specialty chemical, unless we have a very specific stock where there is some specific activity happening, meaning they have some CDMO business, some particular client, then only we'll look at it. Otherwise, we will tend to avoid that. So right now, we only have two stocks from agrochemical side in our portfolio.
So that's a take coming in over there. Nuresh, I want to check. Remember, a few days back we spoke about Ceylon. Around 480 levels is when we spoke about Nuresh. Now at 525. How do the charts look here?
So the chart is very interesting because after that initial bump up which happened post the management change, the stock has consolidated here around that 470 to 550 mark. So in the last 2.5 months, we've made two bottoms around 470. On the top, there have been four tops around 550 levels. 2 days back also, it had seen a spike where it made a top around 540. So if it crosses 540, 550, it becomes a short-term momentum trade wherein it could make a dash towards 620 to 680 levels. So looking at it, watching out for a sustained move above 540 to get into the stock. Longer term structure still remains very positive. So eventually I would expect that breakout to take place. The stock has gone nowhere for the last almost many years. The stock used to be 450 back in 2009 and the all-time highs are around 650. So that's a possibility on the upside for the stock.
Talking about energy, how can we not talk about Swan Energy? Kush, today, my colleague Cheryl's broke the story that there's a QIP underway, good response coming in out there, almost 4,000 crore used for modernization of their one of their yards and of course reduction of debt. But at 740-45 odd, Kush, how do the charts look for Swan?
Well, very encouraging. Incidentally, it's been our call for a while now. Even today, it is one of our calls. The stocks just taken a couple of breathers. Otherwise, if you see the momentum is intact. For the most part, the stocks actually respected its 20-day moving average on the downside and moved higher. So I think all in all, there is traction in this. We know there is traction in the energy space. So I think there are good days to come for this stock even from here on. I think 800 from a positional standpoint is a very easy number that one can look at. Given that on monthly and weekly it's a little overbought, perhaps if someone is looking for a positional buy, then they could add some quantity now and perhaps going forward on dips. But otherwise, on the whole, the stock looks poised to touch 800 and move higher from there as well.
Okay, 800 and higher from there as well is what you're saying, Kush, and that's for Swan Energy. Surely an interesting one to watch out for. Daljit, I want to talk about Zomato. That's been trending and it's not stopped trending. Since this time has started, there's no stopping it. Today also, we've consistently seen that up move continue for something like a Zomato. Any specific view that you have in terms of these new age tech companies? What would you look at it in terms of that as well?
See, we have not taken any position in any of these new age companies in our portfolio. The reason being that first that most of these companies were loss making and all these numbers that you see sometimes ESOP coming in, ESOP going out and all this accounting thing, which is making and this adjusted EBITDA, adjusted so much things, all these adjustments we tend to avoid. We'll let it play to come on its own and see actual numbers should flow in, then we will have much more confidence on it. Now, in terms of business, yes, these companies are doing great businesses. They are developing those platforms, and potential is definitely very, very large. With this just 2-3 rupees of platform fee, these guys can make huge money because the number of customers itself is very large. So there is no denial of that fact. There is no controversy on that part. But point is that what valuation you are giving and how to value these companies. Basically, that is what more important is. When it was at 40 rupees, people thought it was very costly. At 150, it is still cheaper. Probably we can justify same thing at both the levels. So best thing is to, when the company is going through these transition phases, it is we would rather avoid. We'll wait for some more time. There are so many other sectors and companies available for investment. So we have taken
you
a
go.
conscious choice not to get in.
Diljit, before we let you go, what have you been researching lately to add or have added, just for understanding's sake?
So, Ajay, we don't have too much infra in our portfolio right now. In fact, that was the most least exposed sector in our portfolio. I think not even one stock, or that too very small. So we are now looking at some of these road construction, ports, and related infrastructure companies. Basically, we are of the view that if you see in the last 1.5 years, the ordering activity has gone down substantially. There was almost no order from Ministry of Road and Transport. So probably after the election, this pent-up demand will come out, and then our companies, there could be a good potential for many of these companies. Then there have been stated objectives of this government on water and power and all those things. So those such related activities. So for, if we have to play for water, we can play through pipes, who are guys who are selling more to take water by in sanitation, those kind of things. So there are a lot of sub-segments of infra where one can look at. We are looking at opportunities there.
Okay, that's the view coming in from Diljit. Maybe we could look at the infra side post-elections. We could see something happening there. Thank you so much, Diljit, for joining in with us on Closing Trades on ET Now. But Kush and Naresh, I'm going to come to you all for your closing trades ideas for today. And Kush, let's start with you.
Sure. I've got Siemens on my radar. The stock has actually, had a pretty decent run already. There was a brief pause, but from there on, the stock actually resumed its uptrend. The volumes have also picked up on the days when the stock has, ended higher. So delivery marking is also higher on, certain select days. We believe that positionally the stock is poised for 45.25, 4600 kind of move, and a good support zone comes in at about 43.50, which was initially a resistance level, should act as a support level now. So for the second target of 4600 and a support zone of 43.50, Siemens looks like a good buy from here on.
The buy that is coming in from Kush. Naresh, your closing trade ideas?
So that would be a buy on ICICI Bank. And the stock has been knocking around at 1050 mark, which is a major resistance for the last many weeks. So it did hit a high above that. So a new 52-week high and an all-time high for the stock. I would expect it to take leadership from tomorrow. So expecting a bounce back in a rally here. Stop loss to be kept at 1030.
Okay. Those are the closing trades idea as of now as well. Nifty, nothing changed since the last time I checked it. 22,140 levels is what it is at. But let's slip into a very short break. Don't go anywhere. We'll be back with more updates after the break.
All right, so Naresh and Kush are still with us, and more fund managers would be joining. But before that, we're just taking a detour from markets and tell you about certain parts of the country which are bustling right now. There's a lot of economic activity happening, and one such area is J&K. Pull up the graphic or the list of infra projects which are being launched in J&K now by our Prime Minister. There are almost 32,000 crore worth of projects, development projects, which are being launched in J&K, from AIIMS to IIMs. It's a mega development push by Prime Minister, and one of the tallest bridges is coming up there. New Jammu Airport Terminal is coming up. So upgrading of infra, education related, civic infra, new terminal, so much stuff is happening there. So we thought of covering this point from the economic angle, because there is one particular entity in the listed space which is the direct play of how J&K has turned around in the last few years. In fact, talking of turnaround, we have Mr. Baldev Prakash joining us from J&K Bank. He's also staged a massive turnaround at J&K Bank. In fact, the way state turned around, J&K Bank also turned around from 9-10% NPA, which used to be the order of the day few years back. It has been coming down to almost 3% now, and the process has yielded a lot of returns for shareholders. But Baldev, thanks very much for joining us, sir. Today we are going to not talk about the bank alone. You have done some good job there, but I want to talk about your observations as the J&K Bank head operating out of Jammu every day, the mega infra drive of the government. How do you think it will benefit the state, and then of course will have ripple effect on your bank as well?
Yes, good afternoon, Ajay. So today, as you have already told, Honorable Prime Minister was here, and the mega projects of more than 32,000 crores were dedicated to the state of J&K. And out of that, there was a push on the infrastructure projects also, but there is a lot of education infrastructure is also being dedicated to the state. So, I mean, these type of projects will have a long-term impact on the overall economy of the state. And obviously, this will be a plus for the banking industry. J&K Bank, being the predominant bank here, is likely to get the maximum benefit.
Absolutely, that's coming in for Jammu and Kashmir. Prime Minister was there as well. But, in terms of bank also, what should we be expecting now in terms of growth? So much is going to be happening there. What are you expecting now in terms of a turnaround, furthermore up move for the bank then?
Yes, so earlier the trajectory of growth for the bank was rest of India was growing better than our home territory. But now, as far as the overall business is concerned, the home territory growth is looking like better than the rest of the country. So what we are seeing, the overall GDP growth for the country is 6.5 to 7% estimated. But for the UT of J&K, we are actually expecting is better than the country's growth.
Thank you very much for joining us on the show today. That was Baldev Prakashji, the CMD of J&K Bank, talking about how the state has turned around, and there's a mega infrastructure push which is happening from the Prime Minister's side. But we'll move on and talk about a quick check with Kush on J&K Bank stock price. Kush, we have been speaking about this bank from 25 odd levels. I clearly remember discussing with you. Now we are sitting at 140. Recently they've done a QIP where funds have also participated. How do the charts look right now?
So, Ajay, this is the level that the stock was at back in 2014. And as you rightly said, we've been discussing this stock from the levels of 2025. So stellar run already. But I think from here on as well, there is still a lot of steam left. The only small caveat here is that, we're seeing a bit of, lack of momentum for the last month and a half. But that could very well be considered as a phase of consolidation after the stellar run that the stock has seen in the last just about a year or so. But it's practically gone, more than 5-6 times. So now I think the stock is consolidating. From a positional standpoint, not a bad idea to buy this stock and hold for levels of 175. A good support zone comes in at about 130. So the run is on very much. It's just a consolidation phase that the stock has entered into, and that perhaps makes it a good time to enter.
Okay, surely that's the view coming in from Kush on J&K Bank. Keep an eye out on those levels there. But let's also bring on board Ashi Anand, CIO at IME Strategies, joining in with us as well. Thank you so much, Ashi, for joining in with us this afternoon. And let's talk about two things. One is in terms of PSUs. Those have seen a rally. That's what I want to know. Do you think that rally in the PSU basket is going to continue? And anything that you are finding attractive, especially in the PSU pack, whether banks or, in the power pack, anything attractive there?
So PSUs have actually had a remarkable run over the last year, but I think it's been driven by a combination of different things. Firstly, you have seen a turnaround in operations, overall operational efficiency has improved. And importantly, across different segments that PSUs are operating in, the business environment has actually improved quite dramatically. Banks, say, for example, are a very good example of the same. Between 2010 to 2020, and especially 2016 to 2020, a lot of PSU banks were really struggling with very large NPA issues. They were struggling with growth, they were struggling with capital. Now, effectively, post 2021-22, with all of these asset quality problems being addressed, you're seeing a very strong turnaround, and you're seeing this turnaround across multiple different ratios. So you're seeing growth coming back, you're seeing credit quality come down, you are seeing operating leverage start to play through, and you are seeing an ROE improvement. Now, valuations which were very, very cheap have basically rebounded, but there is potentially still kind of space for that to grow. So I think that PSU banks are a space that is relatively attractive. At Valcreate, I think we are a little more comfortable with the higher quality PSU bank names. So SBI clearly something that is amongst the top weights. Now, apart from PSU banks, there are other interesting pockets as well. Defense is something which we believe is probably a decadal story that we're seeing. A very strong Make in India push, a very strong strategic rationale for the same. The big problem, however, in defense is that some of these orders tend to be extremely lumpy. So you need to be careful about the specific defense names that you're going after. We actually prefer someone like a Bharat Electronics, which has a much more diversified portfolio. If you're looking at companies like HAL, Mazgao Dock, Bharat Dynamics, I think they tend to be very dependent on specific projects. And if those projects come through, things could be fine. Otherwise, not. These are the two spaces within PSUs that we are relatively more comfortable with. I think power, infra, there are certain other segments which are also interesting. But this is at least a space that we are focusing on.
Absolutely. Actually, one more point I want to talk about is in terms of OMCs, the oil and gas space. Anything attractive that you find there as well? Because, we have seen that run-up coming in, whether you look at an HPCL, BPCL, IOCL, especially in the last few months, there's a sharp run-up there. So, anything that you find in terms of value over there?
So actually, this is a space that we historically not really liked too much. What you tend to see is performance, both business performance and kind of stock prices can be very volatile. One of the key problems in the OMC space is that if oil prices move up a lot, you suddenly get windfall taxes that sometimes come in. You have had, at least historically, not so much under the current government, but you've had caps in terms of marketing margins, etc. We really see OMCs as a space probably which you can trade in and out of. And currently we do understand there is momentum. But this is not really a space where we see as a longer term value creation space, especially if you're looking at the kind of the longer term underlying trends in terms of a shift towards renewables, shift towards EV, etc. So it's not really a space we are very positive on over the longer term. I think in the near term, there is some momentum that could potentially continue.
But today we also managed to speak to some veterans in the oil and gas space as well. So let's go across and listen into what they had to say in terms of select stocks, valuations, where do they see growth here? Let's go across and listen in the OMC pack.
Good stocks are few now, which can create value, or many are already overpriced. And therefore, that is what is unlocking the value. And in addition to that, industries have also spent capex. There is increase in the capacity, there is increase in the display yield, there are the more bottom upgradation projects which have been brought in addition to petrochemicals, etc., which is having the increased profitability, better operational efficiency, and increased volume. So I think that is what is the sum total which we are seeing in the OMC's valuation, and I see there is further value definitely to unlock. It is up the market to realize it.
ONGC has been delivering in the past in the most of the challenging, difficult times at a low prices, high prices, giving subsidy discounts. Even today, despite that, production being stagnant, the current contribution of ONGC to the energy sector is immense. ONGC still has a lot of intrinsic depth in terms of the valuation to keep delivering for decades to come.
Oil prices were to remain benign, I think the PE multiple for all the three companies can substantially increase even from here on. So in the base case, I think BPCL, which is typically traded at a substantial premium, can trade anywhere between 13 to 14 times on a 1 year forward basis. And then if the earnings are benign, I think the best is yet to come for all the three stocks.
Nuresh, just check out the charts for Aarti Industries for us. It's back above the 700 mark, and some of the big companies are talking about worst getting over for chemicals. If indeed that happens in the coming 2 quarters, the large cap quality players will turn around fast because the money will start flowing there. Aarti above 700, how does it look, Nuresh?
So technically, the problem is every time the stock has given a breakout in the last few months, it has not seen follow up. In between, we saw a breakout wherein it crossed about 660, went to 700, and then flopped out for the next 2 weeks. A few days back also, we had seen that breakout about 700. There was no follow up action. So that tells you that there are spiky moves, but the trend is not great. So out here, one would be better off keeping a strict stop loss below 675 if one is looking at a trade. In terms of relative choices, there could be better sectors to play now.
What are your thoughts on the hotels and the hospitality space? On the one hand, players like the leaders, I would say, like Indian Hotels have got re-rated, become multi-baggers already. But even now, when we speak to some of the latest companies hitting the markets, say Sammy Hotels for one, or APJ, the Surendra Group, the Park, one gets a sense that we are still, the cycle is not got exhausted itself. We get a view that demand is good, room addition is happening. Any of the broader market hotel stuff which you have looked at, Ashi?
So hotels is clearly a space which does look quite interesting, especially from a slightly longer term perspective. What you have seen kind of historically is the moment an economy crosses a certain amount of per capita income, and I think $2,000 is the global benchmark. You see very sharp rise in discretionary expenses, and travel and leisure is a very important component of that. So if you're looking at the kind of youth, and if you're looking at the younger populations and their propensity to travel, that is a lot higher. So effectively, as India continues to grow and as the consumer class gets more willing to spend, you are seeing clear momentum in kind of travel and leisure spends. I think the 2-3 years that people were stuck in the house during COVID has actually just accelerated the need or the desire to actually go out and travel. So what we do kind of expect to see over the coming decade is a sustained rise in leisure travel demands. Overall, kind of even commercial travel is doing fairly well, and as the economy continues to do well, that part should also do very well. You're probably not seeing the same level of hotel room additions as the potential increase in demand. And if you just look at any hotel room penetration rates against any other emerging or developed markets, hotel rooms are clearly underpenetrated in India. So this should potentially lead to a fairly strong period of improved occupancies, higher prices, etc. And hotels being a fixed cost business, any incremental kind of revenues flows down very sharply down to profits. So you could see margin improve. So it looks like a very strong outlook for hotels overall.
Swan Energy has suddenly shot up further. The story which we broke, yes, at day's high, crossing the 750 mark. Nuresh, okay, this is also a new one, so I'll have to go back to Ashi. Ashi, Jana Small Finance Bank, have you looked at it? Because it's a recent IPO, but I was looking at the valuation. Even after IPO at 450, comes down to one-time price to book, forward price to book. Have you looked at it?
So we've not specifically looked at Jana, as in we've had a cursory look, but not something very in-depth. But, I think at a broad level, the ability of kind of small finance banks to really generate value, longer-term value, right? Longer-term value, longer-term ROEs, I don't think is yet very clearly proven. What you have seen is at least small finance banks that have been around for a certain amount of time, given the fact that sometimes they're lending to fairly concentrated segments, they can be quite high volatility in terms of their business operations. We haven't really seen, according to us at least, a small finance bank really prove the ability to compound over the longer term. So we have had a cursory look.
Snap the line with Ashi, but yes, looking at that side, Jana, Small Finance Bank as of now has seen a sharp jump up as well. Nifty 2 trading at new record high levels as well. 22,200 is what the Nifty is managing to hold on to as well. Sharp run up that has come in from the the markets as well. But Naresh, I'm going to come to you. There's this couple of stocks that I want to talk about. One is Zaggle, and the other one is Ease My Trip. Obviously both these stocks have seen a good run up. Zaggle also is seeing a very sharp run up today as well. You've seen these charts of these two companies specifically?
So Zaggle, the problem is it's a new listing. There is not much data, but if you were to look at it purely from the available data, which is less, we've actually crossed the stock, has crossed the highs made after the IPO, wherein it was topping around this 270 to 80 mark. So the momentum is strong, but the risk reward is not at current level. So I would avoid it for now. Ease My Trip, on the other hand, I'd be a little cautious because what has happened for the stock is the stock has not seen momentum, wherein every other stock in the sector which is related to these businesses, whether it is a Make My Trip in the US or Indian companies, they've already broken out into 52-week highs and all-time highs. So out here, the relative strength is not great. So I would wait out. If it can start sustaining above, say, 60 odd levels, then maybe it will come into the radar.
I wanted to check the charts for Gujarat Fluoro for me. Above the 3,500 mark, last 3-4 days, the stock was witnessing pressure, topping out around 3,600 if I'm not wrong. Pull up Gujarat Fluoro, and now it appeared to have stabilized. Is it a buy now? What do the charts tell you? Kush?
Sure. So Ajay, I think there's still some, there's still some pressure on this. The reason you've been seeing it top out at close to 3,600, one is because the 20-day moving average also comes in close to that, 3,570 odd levels. Plus, there have been a couple of attempts made at, that price. Even today, the stock could not sustain above that level. So I think, there is still some time before the stock will actually make a dash, above 3,600. Although the volumes have picked up today, it's not translated into that convincing a price action where it, breaks out the resistance levels. So you're right to spot the 3,600 mark. Once that is taken out is when the momentum will return. So for an existing, investor or a trader who's got a position in this, it's a good idea to hold on to this one with a trailing stop loss at 34.75. A break above 3,700 could very well, take this 3,600 rather, could take the stock to about 3,700 and then 3,770 kind of levels. So be patient. A breakout might be around the corner, but a fresh entry only above 3,600.
Okay, that's the word on Gujarat Fluoro. But Ashi, you were making a point on Jana Small Finance Bank as well. Talk to us about that, as well as in terms of anything interesting where everyone is talking about consumer staples. No one's interested that much in it, but anything that you're finding interesting in that pack as well.
Yeah, sure. So my apologies, there's some internet problem. Yeah, so in terms of Jana Financial Bank, I think the core point we were trying to make is that the whole small finance banking space and the ability for small finance banks to actually create long-term value creation for investors is not necessarily something that we've really seen until now. We've not yet seen a small finance bank really scale without kind of a certain amount of volatility that you're seeing in business operations. So it's not a space that we are very optimistic at. We'd like to see this whole banking license around SFBs, their business models evolve a bit more before taking more aggressive exposures out there. I'm sorry, what was your second question?
Consumer staples, that is also not much of an interest that anyone has there right now. But do you think that there is something that one could look at that is looking attractive in the consumer staple space?
So consumer staples is a space we're watching quite closely. I think what clearly the problem is that both rural consumption and in recent times, even urban consumption has kind of slowed down. So across the board, and you're seeing this in consumer staples, but you're also seeing this in other consumer segments, demand growth is actually quite weak. You probably want this to come back before you see some momentum. A key element around, I think, the market focus shifting away from consumer staples is pretty much over the last decade, you had a lot of these consumer companies, as consumer staples especially, re-rate quite significantly because of a lack of other investment options that were there. With a number of new emerging themes coming out, which are quite attractive from an investing perspective, real estate, capital goods, the whole PSU space, etc. A lot of market focus has shifted towards place where there is growth. And the problem at some level with consumer staples is while growth is not there, valuations are still no longer cheap. So you probably need growth to come back for these stocks to start to perform. Now, within consumer staples, there are certain relatively kind of interesting pockets. I think HUL has underperformed quite significantly, and probably for the first time in many, many years, you're seeing a company like a Godrej Consumer trade at a premium to an HUL. Britannia has recently just crossed them. So I think it is clearly a space interesting from a long-term value creation, but you do need growth to come back with this space to move.
Absolutely. Okay, that's one we're watching out for. But Naresh, let's get in your BTST trades for today.
So first would be a buy on ICICI Bank, setting up for a move above the previous all-time highs in 1050, expecting a move towards 1075, stop loss at 1030. Second is a buy on Tech Mahindra, which has created a base crossing two-day highs. Looks like a momentum trade. Stop loss at 1305, target price of 1350.
Okay, and Kush, your BTST trades?
Well, one stock which we've extensively discussed already, which is Swan Energy. There is momentum, and we've got proof of it as well. The stock's up about 10 rupees from when we started the show. So 780 is the second target, and 730 is where I would place my stop loss. The other stock is IEX. This stock is also witnessing, a fair degree of rebound. Crossed over its 20-day moving average and sustaining above that. I think 149, 151 should be the near-term targets. 144 is where I would place my stop loss.
Okay, actually, one point I want to talk about is, in terms of when you talk about private banks versus PSUs. Private banks, obviously, we know that they have not done much in terms of a performance versus a PSU bank. What is it that you are looking at in terms of private versus PSU banks?
So it is actually quite interesting because leading private sector banks are all still growing. Valuations are not very expensive, but they have just been struggling to perform. The way we kind of look at it is historically you had two kind of bellwethers of the market, being HDFC Bank and Kotak Bank. Now, these were the private banks that would trade at the kind of larger premium valuations to the entire other pack. However, both of these banks have had specific issues that have impacted performance and stock performance over the past year. HDFC Bank is obviously struggling with the merger at the current time, and Kotak is actually seeing a transition away from Uday Kotak, a much beloved leader. These banks, according to us, have led to some kind of a ceiling in terms of valuations of other banks. So an ICICI Bank, basically, if you see, caught up to an HDFC Bank valuation and then really struggled to kind of move beyond that. You've subsequently seen an Axis and an IndusInd also starting to move. But if you have an HDFC Bank at about 2.2, 2.3 times, ICICI Bank is also now at similar valuations. In fact, it's recently just crossed an HDFC Bank. It really doesn't give too much room for other private banks to actually move up. So I think this kind of value premium compression that you're seeing is at some level causing some kind of a ceiling in terms of stock performance for some of the other private sector banks. And this at some level is where market momentum is kind of focusing or shifting a bit to other smaller kind of regional banks or PSUs, etc., where the valuation gap is still there.
Okay, that's coming in on the banks front as well. But let's look at what the Nifty is doing. Record high levels continues for Nifty as well. 22,213 is where the Nifty is at. So surely interesting. That is one to watch out for. Kush, just the last word coming in on the banking side. Anything that you are looking at in terms of charts on the PSU banking front?
One stock that we've had on our radar just happens to be from the cash segment, is Union Bank. It's a little subdued for, a couple of days, but I think, once the bank Nifty momentum that we are seeing picking up, comes through, then I think the stock could move higher. What we're looking at in terms of target are 145 and 149. So Union Bank is one stock, that we have on our radar from the PSU space.
That's the word. Thank you so much, gentlemen, for joining us this afternoon on Closing Trades on ET Now.